Without Yellen's dot, what do the dots look like today at 2 o'clock?
Sure, and I think that's really where the focus will be on those dots. So for this year, we think they'll hold at 3 hikes. It's possible they shift to 4, but you would need 4 FOMC officials to move from the 3 hike camp to the 4 hike camp to get there. And I think that's probably a little bit of a high hurdle. But next year, I do think we have a shift up in the dots to 3 hikes. And I think the risk is that the long run dot also moves up to 2.875 from 2.75. So part of it is you're doing this math in terms of naming the dots, removing Yellen, and then you're trying to also determine based off of the speeches as you just played, Brainerd and Bostic and Kaplan, and we've heard from a number of Fed officials, you can kind of get a sense of how they're seeing the risks as well.
So if we do move up the neutral rate to 2.85%, what does that actually mean for the market?
Sure. So I think it starts to hint in the direction that the terminal rate of this hiking cycle may be higher. It doesn't say for sure, but certainly it suggests that Fed officials could be switching the direction, which has been for a steady downshift in that terminal rate or in that R star, and now starting to see some modest upshift. I think it'll be particularly compelling if that goes along with an increase in potential growth estimates, which we do anticipate.
Well, that's one of my questions. What are we going to learn about their assessment of the economy, quite apart from where the dots go? Because we really are running right now above what they call the speed limit. I mean, I think you have it at 2.9% this year, don't you? GDP growth?
We do, yeah. We have GDP at 2.9%, and we have potential still below 2%.
Yeah, so that's an issue at some point.
It does become an issue unless that potential growth rate starts to move up, and then you actually see an economy that has some more capacity. But yes, all else equal, if potential is holding below 2%, then the economy risks this overheating, price pressures build, and you get this adverse scenario. That's why I think it will be critical what happens to the long-term assessments. Is there enough evidence at this point where Fed officials are starting to believe in a little bit higher trend growth, starting to believe in a little bit higher R star, and market participants can actually start to buy into that as well?